Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're going to look at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature, actually looking at the last print of 1041.25. The market has essentially died after that huge sell-off that we got. This is, of course, Wednesday, the final day of June 2010. Yesterday, of course, was Tuesday, and yet another beautiful, we could argue, a turnaround Tuesday given the directional movement and nature of the print. Absolutely beautiful was the case. We're looking at the reason the market is not continuing lower is a big sell-off yesterday on Tuesday. But as you can see, looking at our proprietary indicators, our intraday dynamics, as we call them, we're looking at a bullish state, actually. So we're going to scroll in. And look at all this bullish. So we had this flat open, came up to retest the underside of the trend, didn't move lower, didn't make new lows. Why? Well, because look at all this green. Bullish, 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 bullish. The actual bars went to bullish. We were actually above the trend. So essentially the predominant influence of the bears, the sell-off yesterday, along with the trend, has really kept the bulls from moving higher based on what should be a higher market, given all the bullish indications that we're seeing. So if you're going to trade for informational purposes, you would definitely want to be buying a breakout, late session recovery of yesterday's move above 45, we'll call it. So that's been the early session or midday high, 43.75. You definitely want to be buying a breakout 45, and you can see a quick move to 55 and even 65. Who knows what the market's going to do, but generally we remain bearish. Now, of course, this is on an intraday basis. Obviously, the bulls are controlling, at least going to stave off any selling on today's session, Wednesday, the June 30th, kind of a quiet close to the quarter, if you will, the second quarter. But we should get some fireworks tomorrow, but definitely did get to some impressive selling was the case on Tuesday. We profited handsomely, very nicely. In fact, our average portfolio was up a staggering 20% just yesterday alone for Tuesday. Again, as we've often mentioned in this space, 80% of our profits are generated on just 20% of the trading days, arguably 10 to 20% of the trading days, 80 to 90% of the profits. So you really have to kind of bide your time around the chop and then make sure you're positioned either generally speaking, or you're taking advantage of adding additional exposure on a retracement of a portfolio. Why do I mention that? Well, we're going to look at the MapDT version 4.0 HR that we've mentioned at a run-up of 100%. Generally, if a portfolio has a run-up of 100%, people love to see that and they want to jump in, but it's definitely a better idea to wait for retracement. As we've often mentioned internally, we're always promoting, of course, our big wins. That's what people want to see, but internally we're telling our clients on this retracement of 50% of the profits down to a key Fibonacci retracement level of 50 to 618. Definitely want to be buying this portfolio, and we certainly saw a perfect textbook example of that just yesterday as the MapDT version 4.0 HR banked about $6,000 after retracing about half of its gains. We're going to look at that in a second. Right now, the bulls do remain in control, essentially going to stave off any move to the downside, but essentially the market is a quiet day. Definitely want to keep it close to the vest, or just trade any little fake out move in the market. So that's the intraday perspective. And look at the swing system 5.0, back to its winning, just amazing trades. Would have loved to have caught a little bit more of this profit, and we're up 10,500 and reversed at 10,100. So that's 400 points left on the table, but nevertheless, 10,100 bought around 9,700. So a nice 400 point gain for swing system 5.0, the venerable swing system 5.0, and then of course right back to another another profitable trade, short at 10,100, and just booked those gains around 9,800. So there's another 300 points for the swing system 5.0. And back to the long side around 9,800, but we're looking actually for chart of the daily market. This is the daily S&P 500 cash market. As you know, if you're following our videos, our official market timing has remained bearish since the break below at 11:58, and of course now we're at 10:44, profit of 116 points in the market on this. That's of course 116 S&P points, 116 ES points. It's quite a bit of profit. on the this, of course, our official market timing. And you can, of course, auto trade this rather than wait for the videos, which come 1 to maybe 2 times a week. You can certainly auto trade these instantaneously for just $999 a year, and there's no additional fee. You can trade 5, 6, you can trade 50 contracts if you'd like in the ES, just $9.99 a year, and you can take advantage of instantaneous trades when we switch our market timing to, as you can see, bullish, bearish, or neutral. And of course, prior to that, 600 points has been the call over the prior 16 months or so. And of course, if you've been following us for years, which many of you have, you've seen those trades essentially come to realization. But for right now, we're trying to hold this level of back to the fulcrum, if you will, back to the swing point lows in the market where the bulls have historically bounced back. We're right back there at around 1040. As we've mentioned, the ES and S&P loves the 1040s and 1080s. Actually got almost up to 1140 on that errant move, which almost whipped us out. Had we gotten another break higher and that not just simply been a faded gap, we might have actually moved to bullish, but fortunately we held onto the bearishness, given this very key, another Fibonacci retracement zone, 50 to 618, got up to the 618, a little bit below, or sorry, a little bit behind above the 618, and the market, as you can see, was a great opportunity to add to short exposure. Certainly don't want to be switching to bullish, so that came into fruition nicely, and the bears continue to remain in total control. There's a little bit with all this move from the bulls, there was a little bit of gray status in a lot of our indications here, but actually back to fully bearish on for all intents and purposes, save this this horizontal level right here around 1040. Might get a little bit of a snap back to 1060, 1080 in the market. There's the Russell Day Trader 1.0 putting up some nice gains, as you can see where we are right now. In a short position, so there's another trade for you. We'll call that short at 617.60 on the Russell, the venerable Russell Day Trader 1.0, getting chopped up a little bit, but these beautiful winners, as you can see right there. But we're going to go ahead and move over to yesterday. Was just a banner day for the market. There's a disc pad up at 1125. Matt Black was up $20,000 yesterday. 20,000. As you can see, almost all of our systems were profitable yesterday. Again, 80% of our profits are made on just 20% of the trading days. There's the Triple Threat Trader HR. I'm actually looking for, here we go. TTTHR gains 25% on a $10,000 portfolio. MapDT version 4.8 HR gains $6,000. The leader was a staggering 40% gain in the Delta B. It's around here somewhere. SSR gained $3,500. There's a Delta B gaining 40%, almost $11,000. There's a MapDT version 4.0 HR gaining $6,000, 24% yesterday on the 29th day of June. And there's the MSA Ultimate. It gained on a $15,000 minimum, gained 20%, of course, on a $15,000 minimum. Nice 20% gain for that portfolio. That's the new Ultimate portfolio, as you can see right here. This is kind of what we send out to our clients, and of course we've been mentioning to them internally about these new Ultimate portfolios, which we mentioned to you too. You as well, but there you have it. As you can see, huge losses today on the 24th. Perfect time to take advantage of the drawdown in the portfolios. Again, on 25th, MapDT version 4.0 dropped another 10% Friday and has retraced 58% of its profits, very close to the Fibonacci 618. So another opportune time to get started or add additional exposure. And right there we mentioned, and of course those we're going to take a look in graphical form. Those clients that did add additional exposure or start or upgrade certainly were rewarded handsomely. There you see the equity curve of the MapDT version 4.0. That's its profit going from zero, $4,000 on this day, all the way up to $25,000 in profit in just the last month. Came down, we had about 3 days of losses, came right down into this key Fibonacci zone, 50 to 618. One closed below, as you can see right there, and boom, right off to the races. We were screaming. This is when you want to buy this portfolio. Right here at this key zone, boom, right back. $6,000 has been the reward so far. So what I'm saying, not too late to get involved in this portfolio. You can actually subscribe to 2 quarters and get 2 free and get a rebate from the broker to pay for your subscription. How can you ask for any better deal than that? Essentially trade for free and trade for half price for the entire year for the portfolio. If you have any questions, go to the website, chat with the support team live, or shoot us an email to admin@MiniAnalyst.com. And hope you enjoyed the update, and we'll see you next time.